Guys, welcome to the channel. Welcome back to another video. Let's have this conversation today. And this conversation is going to be about the Fed, the Federal Reserve. What just took place yesterday was actually pretty important for regular investors. So I want to have this conversation today and talk about it. The Fed's warning to consumers, to investors, to all Americans. Prices fall. We'll talk about that. We'll talk about the stock market being up and what you should do, right? I don't want to leave this video without talking about what you should be doing right now as a regular investor, right? So let's have this conversation. The warning is the Fed is telling all of us we are keeping rates high right now, and we won't be doing any cutting of the interest rates right now and making money cheaper to borrow anytime soon. That's the warning for us as investors, for us as consumers that we need to know about. Guys, as you come in here, do me a favor, hit the like button, but also let me know where you're coming from. We're going to be talking about why the Fed has completely paused rates. As I said, we're going to get into the S&P 500, which has hit what? 25, is it 25 or 26 record highs this year alone? And so we'll also, of course, dig into inflation as well. And the key is, what are you going to be doing? I never like to leave a live or a conversation without saying, what can we practically be doing right now as regular retail investors? Let me know what city you're in, what state you're in, what country you're in. Let me know if you can hear me okay with a thumbs up. I really would appreciate that too, guys. Thank you so much for being here. Welcome in. So glad and appreciative you guys have decided to join me tonight for this sort of, I like to call this sort of a recap on what's going on economically in America in plain language. Nothing fancy. Let's see. Art of War said hello from Ohio State. Grayman's going to check in later. Helen Harris, good evening from NYS, New York State. That upstate, Albany, where you at there? Namisha, how you doing? Good to have you here. Atlanta, Mrs. Moore, thank you for being here. Juliet is in the house from Dallas, Georgia. Troy from South Carolina. The Wallamala by GME. Wilbert's here from Orlando, Florida. Kenny from Chicago. Thanks for the thumbs up. Sean Pinkston from Pittsburgh. And we got someone from Tampa, Florida. Hey, from Tampa again. Hey, big up from Connecticut is all the way in the house. Good. So we got a lot of East Coast representing here, guys. Checking in from South Georgia, down south. Port St. Lucia. We got them from South Holland, Illinois, right outside of Chicago, southwest of Chicago, I think. We got Branson, Missouri's here. Good to have you here. Commerce, Michigan, checking in. We got them from California, Marcos, Elmana. We got somebody come from Austin, Texas. Renita, good to have you here. Southern Jersey's in the house. Good. First time commenting. Good, glad you're here, and thanks for checking in with us. Big Apple, NYC. Is that Manhattan, Brooklyn, Bronx? Queens, where's that at in New York? Let's see. Slovenia's in the house. Wow, all over the world, guys. Carson, California, guys. So we're well represented all over America and even in parts throughout the world. So thank you so much for being here again. I appreciate it. BX, I think that's Bronx, right? Big up Miami. Good to have you here. So let's start with CPI, guys. And do me a favor, hit that like button for me, and we'll get up. We'll talk about all that stuff later on. First, let's get started. CPI inflation just came out. The report came out yesterday, right? Yesterday, June 12th, CPI inflation numbers. The CPI, and I think I have it up here somewhere. I'm not going to change screens just yet, but it basically indicated that inflation was about 3.3%. Slight decrease. I think it was from a 3.4% reported the previous month. So on a month-to-month basis, overall, CPI is right around the same thing, right? Basically, no increase, not a big decrease, but basically hovering around that 3.3. Now, some of the things that's contributing to inflation still being where it's at, not down to that 2% mark that the Fed wants, is, and I think the Fed came out and said some of this yesterday in their meeting when at the end of the 2-day meeting, the Fed chair, Jerome Powell, came out and gave his, 50-minute speech and talk, and with talking points and all that good stuff. And that stuff is very, very well orchestrated, right? Because the Fed knows that anything they say is going to The markets hinge on what the Fed says. If the Fed chair comes out and says, "Hey, you know what? We don't think we're going to cut rates for 2 years." If he says something that dramatic, it's going to affect the stock market, right? But some of the things that were happening in terms of CPI, rents were still sort of the same, still going up at the same pace, a little bit higher than they should be. Medical care, I think there was used cars and used trucks on there as well. But some of the decreases in inflation that we saw was new vehicles sort of went down. I think I said airline tickets or airline fares to travel. I think that went down as well. And was it store price or not retail, but apparel, like for clothes and stuff, that went down a little bit as well. But core CPI inflation that gets rid of that energy and food, it was up about 3.4% from the past year. Now, the core is what the Fed really wants to get down to their 2% mark. So the core inflation was still around 3.3, 3.4% mark, right? Too high for the Fed's liking. Too high for what the Fed wants, right? They always talk about their dual mandate, right? Their dual mandate, maximum employment and price stabilization, right? And I always say this, guys, when the Fed says they want maximum employment, it doesn't mean they want everybody working. That's not what they mean. They just mean maximum employee to manage and handle a 2% inflation rate, which is what they're targeting, right? So inflation is going down slowly but surely, too slow for the Fed's liking. How do I know it's too slow for the Fed's liking? Because they pause their rates right at 5.25 to 5.5%, right? And so we're clear. Inflation. When we say inflation, that's just the rate at which prices rise every year, right? Also calculated month over month as well. High inflation means prices are going up year over year at a faster rate than what they want. Low inflation means the opposite. Prices are going up at a rate which is nice and slow. A 2% inflation rate means prices went up 2% year over year. A 10% inflation rate means prices went up 10% year over year. That's the problem, right? So inflation is sort of stagnant right now, guys. Stagnant, staying about where it's at, which the Fed ain't having it, right? Best, before we move forward, do me a favor, smash that like button for me. Please hit the like button, share the link. Oh, by the way, I need to mention this, guys. I'm going to be disabling the membership site on YouTube. So if you want to join this channel, don't join this channel. Don't click that join channel button on here, right? But I do have we moved it over to another site where you can still join me. Lots of behind the scenes stuff, making of videos, my net worth, whatever it could be, a bunch of stuff, digging more deeply into this investing thing, doing some one-on-ones over there. So there's a link to that membership site in the description box where you can become a member, right, of our bigger and better membership site. Right. Join me over there, guys. I take you behind the scenes of this channel, behind the scenes of investing, etc. Right. Lots of stuff over there. We're going to be able to dig a lot deeper. And it's a broader place for me to actually go a little deeper into some of these topics, as well as give you guys a little something that may not even be money sometimes, right? You can also get a one-on-one with me over there. There's a link to that in the description box here on YouTube. Also, I want to mention, check out my partner, Mint Mobile, right, for premium wireless services. And you don't have to change your phone number. They use the largest 5G network. It's just like having any of the big boys. Mint Mobile is there. There's a link to that in the description box as well. So I just want to get some of those things out of the way. But make sure you hit that like button for me, guys. I really would appreciate it. Somebody says there's no way inflation is that low when everything is 4 times the amount. I get it. Doesn't feel like it. I understand that. NW, thanks for the thumbs up. I understand it. Trust me, I really do. Right? This is the numbers they give us, though, right? I can't dig any deeper than what they give me. Guys, do me a favor and hit the like button. Hit the thumbs up button for me so we can dig deeper. All right. Alvira's in the house. Good to have you. Good afternoon to you as well. Let's see here. Of course, inflation is super high. The government removes food and energy inflation because they need to show a lower number. So they actually the headline inflation is the CPI, right? That's the headline that comes out. Hey, this is what our inflation that got up to 9% like 2 years ago, 9.1% or something, right? But the Fed really they don't look at the CPI, which Clint said carries the energy and food in it. Now, their reason for saying they don't look at the CPI as heavily as the core is because they say the CPI, the food and energy are volatile. They go way up, they go way down, right? They have these big, large swings. So they say, hey, we're going to give you a broader measure, but it's going to be broader, but it's not going to include the food and energy. So, and by the way, so food and energy are connected, right? Because it takes energy to get food from wherever it is and packaged and shipped and sent over to you at the grocery store, right? That takes energy, right? How does the food get to your grocery store where 90% of us shop? Well, it gets there because it travels on a plane, a truck, a train. It travels over there, right? So food and energy are kind of synonymous with each other, right? But the core inflation that the Fed really looks at removes food and energy out of the pocket. So Fed had their meeting yesterday, right? Came out and said, look, we're going to keep the Fed funds rate at the unchanged. I think this is 7 meetings in a row where they kept it unchanged, which is high. It's relatively high. Okay, so the Fed funds rate right now is between 5.25% and 5.5%. It's always a range. It's between 5.25% and 5.5%. In the big scheme of the last 75 years, that ain't really that high. Okay. But in the scheme of the last 15 years, that's really high, right? The Fed funds rate is just, by the way, the Fed funds rate that the Fed has control over, it's just the interest that banks charge one another for overnight lending to each other, which are really short-term loans, like a week or two, right? They charge each other to borrow money from one another. That's what the Fed funds rate is. So when Bank of America wants to get money from Chase, Bank of America has to pay Chase a rate between 5.25% and 5.5%. Well, when me and you walk into Chase or Bank of America to get a loan the next day, they pass that interest rate onto us by making it more expensive for us to now borrow. So if the Fed funds rate goes to 4% down a full 1% or 1.5%, if it goes down, now the banks can lower the rates that they charge us for the loans. But when that Fed funds rate gets up and up and up and up and up, they pass it along to me and you for short-term loans, like credit card loans. And you know that every credit time you swipe a credit card, that's a loan, basically, right? That's why your credit card interest rate goes up to 20 and 25 and 30%, whatever it could be. Auto loans are short-term loans. Other personal bank loans are short-term loans. So that's kind of how that works, right? Fed fund rate goes down, our rates go down, and money becomes cheaper to borrow. Fed fund rate goes up, we're charged more for short-term loans. Money costs more, and our interest rates go up, right? So this decision yesterday by the Fed, by the FOMC, Federal Open Market Committee on the Fed, this decision by the FOMC, the Fed, let me look it up and make sure I'm saying this right. Yep, it was the 7th consecutive time since July of 2023 that the Fed paused the rate, didn't change it, didn't up it, didn't lower it, right? And so basically, hey, the Fed wants to get down to 2%, and they're being very, very stubborn about it. They're not going to touch the Fed funds rate until they get to see a 2% or near 2%, closer to a 2% of inflation rate, right? Now, this is the balancing act. Okay, I'll talk about that later, but there's a balancing act. Remember a year ago, guys, when the Fed was raising the rates and raising the rates and raising the rates? Well, the Fed was raising the rates and raising the rates to stop you from going out and borrowing money, slowing down our spending, right? Now the Fed is basically saying, hey, inflation has not slowed down enough for us to cut rates, right? But inflation is not so high and increasing so much for us to raise rates. So we're just going to chill right here on 5.25 to 5.5%. We're just going to relax right here for the last 7 times, since that's almost 10 months, right? The Fed is basically saying, hey, we still got to get the inflation down. We still got to sort of slow down our spending just a little bit. So this thing called inflation will continue to go down, folks, right? The Fed basically said this in their decision yesterday. The Fed's decision sort of reflects, in my opinion, the Fed's ongoing concern about inflation. They don't have to say it. The fact that they didn't change the rates tells me everything, right? Yes, inflation is cooling down, but not to the satisfaction of the Fed. So the Fed gives a warning. Hey, guys, here's the warning. We are going to continue to make borrowing money expensive, more expensive. We're going to continue to squeeze you out as a consumer and not give you any incentive at all to go buy something or to go borrow money. We're going to do that by keeping the Fed funds rate the same, right? Think about 4 or 5 months ago, guys. Earlier in this year, they were saying, oh, we're going to have 4 or 5 rate cuts. The Fed is going to cut the Fed funds rate 4 or 5 times this year, right? Well, now I think the stock market is pricing in one cut. I think it's going to be September. One cut for the rest of the year, possibly one cut. Of course, that's going to hang on a lot of other positive inflation data and information that's going to come out, right? But the Fed is being very, very cautious at this point. What they would call this, the Fed is being hawkish, right? Dove versus hawk. A hawk is like all over you, all in your business, right? Making sure hands on, being very tight. That's what the Fed is doing, being very hawkish with this decision, right? Basically, money is going to remain fairly expensive to borrow, right? That's the Fed warning. That's my urgency to you. Why won't the Fed? Okay, let me ask you guys this, and you guys can tell me. Why won't the Fed just cut interest rates? Ease off a little bit on us, right? I might want to go buy a house. Now, listen, the Fed funds rate affects short-term loans for us. It's not directly tied to mortgage rates. However, it's sort of indirectly tied to mortgage rates, right? So the Fed funds rate, what really curtails mortgage rates is going to be the 10-year Treasury, but the short-term loans sort of have an indirect effect on mortgage rates. When the Fed raises the Fed funds rate, typically mortgage rates ultimately go up as well. When the Fed lowers them, typically mortgage rates go down, right? Okay, let me say it like this. If you don't take anything else from this live video or from this video in general, if you're watching on replay, if you don't take anything else from this video, I want you to take this. When the Fed cuts the Fed funds rate, cutting the rates, slashing the rates, whatever you hear them talk about, when the Fed cuts interest rates, that is inflationary. Okay? That means that, in other words, that can have an effect on inflation going higher when the Fed cuts the rates. Because when the Fed cuts the rates, they're trying to tell you, okay, now we're going to make borrowing less expensive, right? And when they make borrowing and money cheaper to borrow, it incentivizes people and businesses. Don't forget about my businesses. It's going to incentivize people and businesses to go spend money, go borrow money. And when people and businesses go spend money, guess what happens to prices? When people and businesses say, oh man, money is cheap. Oh, money, 3% interest rate. Oh, money is cheap. I'm going to go spend and go borrow and get some money because money is cheap. So people start spending when money is cheap. And listen, even the business. Let's say I'm in business and I make hats. I make hats and I'm in business, and now money is cheaper to borrow. Guess what? I'm going to go borrow money to get better equipment. I'm going to go borrow money so my press machine gets updated. I can go buy one now at a 4% interest rate instead of a 10% interest rate. Yes. So not just us, we go out and borrow more money, but businesses are incentivized to go borrow money when money is cheap. And when money is cheap and everybody's borrowing money, everybody has money, guess what happens to prices? Prices go up, right? Prices go up. So when the Fed cuts Fed funds rate and makes money cheaper, that is inflationary because now prices are going to go up, right? So when the Fed wants you to spend less money, they raise the Fed funds rate. When they want you to spend more money, they lower the Fed funds rate, right? Think about what happened back in the pandemic, guys. When the pandemic hit, interest rates were what? Actually, they were super low. Actually, the Fed funds rate that is between 5.25% and 5.5% now and has been paused right there for the last 7 months, 7 meetings. That Fed funds rate was right around zero, right? During the pandemic or when the pandemic first started, it was around zero because they were trying to incentivize you to go out and spend money. I'm just giving you guys this big picture of how this whole thing works, right? So we can get a feel for this thing, right? The Fed wanted you to spend money, so they had the Fed funds rate around zero. Remember, nobody was leaving the house. Businesses were suffering because nobody was at the store shopping, right? The Fed said, hey, let's get these super duper low Fed funds rate, these interest rates. And on top of that, watch this. On top of that, the Fed said, you know what? Well, the American government said, hey, we're also going to give you $5,000 worth of stimulus money too. So not only was money super duper cheap to borrow, but at the same time, I'm going to give you an extra $3,000, $4,000, $5,000 per family to get out there and spend money. So the interest rates were low and they were giving you money. Think about that. That incentivized people to spend. And then some people wonder why 2 years later, the inflation rate was 9%. Well, it was 9% because of what I'm trying to explain to you guys, that this is what they were doing. They were pumping money into the economy. At the same time, the Fed was doing what they call quantitative easing, right? Putting a bunch of bonds. They were creating money and putting money out there for us to spend. That's what happens, right? Now we had this incredible high inflation. Now they said, you know what, we gotta calm that down. So we're gonna pump up the Fed funds rate to 5.25% and 5.5%, right? To slow everybody down from spending money. And guess what? The Fed said, we're gonna stay where we're at. We're not gonna give you any relief because the inflation is still high. So money is gonna still be rather expensive to borrow for you. Now we know the economy has made some progress, guys. Unemployment, it's creeped up a little bit, but it's 4%, really low, really, really low, right? It may go to 4.1, 4.2 in the next month or two, but 4% is very, very low. But now the Fed did say, Chairman Jerome Powell did say, hey, the amount of jobs and the amount of people looking for work, it's starting to come in better balance, right? Better balance, which means, you know, the unemployment is going to increase a little bit. That's what they're anticipating. Right? That's better balance. They can't have everybody working a 2% unemployment rate, right? They want it to come in better balance. The amount of available jobs and people looking for jobs and so forth, right? Less demand or demand and supply of available workers to come into kind of cahoots with each other, right? So PCE inflation, that's, you know, it was 7% 2 years ago, 2 summers ago, June of 2022. It was 7%. Now it's down to 2.7, 2.8% or so, right? Still not down where they want. GDP, still 1.3%, not in the negative, not great, slightly down from the end of last year, right? Consumer spending has slowed down. Just give me the big picture, guys, right? Big picture. But let's have a conversation about what this means for us. By the way, smash the like button for me, guys. Don't forget that. Let me go to the chat a little bit. Supply and demand for food is high, so prices continue to rise, Ms. V said. Let's see here. So isn't that counterproductive? Hiking rates, say that again, Alvira. So isn't that counterproductive? Hiking rate hikes, just asking. Ask that in a different way, Alvira. I don't really understand how you're asking that. Let's see here. No more stimulus, please. Yeah, stimulus. Let's see. We was popping bottles. Somebody said. BF said we was hyped up, right? Oh, that $3,000 check came. That $5,000 check came. Oh my goodness. Then you got people that went out and got the PPP loans, and I mean, some people are, fraud involved with some of the PPP loans. Everybody was right. We was chilling. But guess what happens when you're chilling and getting checks? And they know that the more money they put in Americans' hands, the more money Americans are going to spend. See, the Fed sort of is like the puppet master, and we're sort of the puppets. I hate to put it like that, but I'm just going to be honest with you. Let's keep it 100, right? That's kind of how it works. They pull the strings since 1913. Pull the strings on what's happening with the consumers, and they use their balance sheet, and they use the Fed funds rate. They use these different tools to keep us pretty much doing what they want to do and keep us in balance. That's the kicker. That's the honest truth about it, right? Let's see here. It's 2.8%. Whoops, Trump was handing out PPP loans. I took millions. Let's see here. GDP 1.3% means GDP is just the growth, right? That's how we look at GDP on a quarterly basis. So the first quarter of this year, January, February, March, we got the first reading of that in April. Second reading in May. I think the final reading for the first quarter of this year, the first 3 months of this year, we got in. Or did we get that already? I think it's 1.3%. I don't know if that's the last reading. We get 3 readings from every quarter, and we get them the subsequent quarters. So for January, February, March of this year, we got the April reading of the first quarter of this year. Then in May, we got the second reading of first quarter in this year. In June, we get the third reading of first quarter GDP. And why do we get them like that? Because they have to all the numbers start flowing in, so to speak, right? And so the numbers flow in, and the final reading, June, is the final reading for the first quarter of this year. Guess what? In July, we get the first reading of the second quarter of this year. That's kind of how GDP works. But GDP is just a measurement of all the final produced goods and services in the country. It's kind of how countries measure how productive they're being. A positive GDP is good. The textbook version of a recession is 2 negative GDPs in a row, right? Two negative readings in a row. Now, 2 negative quarters. We haven't had that, but that's the textbook version. Some people think we already have been in a recession, right? I don't think so. We've been talking about this recession for 2 years, but we still haven't seen one. Unemployment's still doing well. Stock market's doing everything's still doing well. So I haven't seen this recession that everybody was scaring everybody with last year and the year before. But that's kind of what GDP means, Allison. I don't know if that I explained it very well. Let's see here. Broadcom. We'll talk about Broadcom. We want to talk about a little bit about the stock market. We want to talk about what all this means for investors, for us as investors, right? Somebody said pandemic made a mess. Let's see here. Miss V, GDP grew more in 2023, but at least we're not in the negative. Yeah, it did grow more. The GDP for this first quarter of this year is down compared to last quarter of last year. Okay, good point. Let's see here. So what does the Fed's decision and the Fed funds rate have to do with us as the average stock market investors in general? Guys, don't forget, hit that thumbs up button for me. First of all, obviously, as we talked about, cost of borrowing money is going to continue to be high. All right. Interest rates are going to continue to be high. Right. Think about this from a corporate perspective. And we look at the stock market, and we know that the stock market has been doing really well. record highs, right? 20 something record highs this year already. But we also have to realize when we look at the stock market doing well, let's say, for example, the S&P 500 doing well, which the S&P 500 is a good barometer for the entire stock market, right? If you look at the stock, how the stock market has performed in total, all 3,000 plus companies, and then you put that and you compare that to S&P 500 ETF, they're pretty much the same. So the S&P 500 is a good barometer of how the entire market is performing, right? So think about the stock. So we have to remember that the S&P 500 is driven primarily by the gains of 10, 15 companies. And even less than that. I mean, I read a stat the other day ago that said NVIDIA was responsible for 30% of the stock market gains this year. So if it wasn't for some of these tech giants, the Apples, the Microsoft, the NVIDIAs, if it wasn't for some of these tech behemoths that are out there, then the stock market probably wouldn't be doing that great, right? If we took, I haven't looked at, if we took those top 5 companies, those tech companies out of the stock market, how's the overall market doing? Probably not that great. But these companies have been carrying the market, right? Because when you look at having a high Fed funds rate, higher borrowing cost, that has an effect on corporations' profit, their bottom line, typically. I say typically because we know the NVIDIAs are out there or the Microsofts are out there, right? And so, but for the average publicly traded company, when borrowing costs are higher, that reduces those companies' profits, right? And so when you have interest rates that are 6, 7, 8, 10%, just using that as an example, companies can't borrow as much money. Companies have to pay more for borrowed money, and paying more for borrowed money takes out a corporation's profits, affecting their growth, typically, right? Which could lead to obviously lower stock prices, lower returns, etc., right? When businesses have to pay more for these loans, it means these businesses are not going to be experiencing as much growth. Now, we have to take NVIDIA and Apple and Microsoft, we got to put them to the side for just a minute because they're sort of anomalies when we talk about the stock market today, right? So for us as average investors, these high rates, typically for us, it means less spending, right? Typically for us, it means less spending into the economy, less investing, right? Higher interest rates usually, and they're designed to do this, and they usually do it very well. They discourage us as consumers from spending more money. They discourage the business from going out and getting more loans, right? Us getting car payments and stuff. Because, hey, who wants to buy another house at a 7% market or 7% interest rate? I know they don't. They kind of indirectly have an effect on mortgages. But look, mortgages go up to 7%. Who wants to go refinance their 3% loan into a 7% loan? Not many people, right? People have less disposable income with higher interest rates, right? Because we're paying more for loans and mortgages, whatever it may be, if we have a new mortgage, right? So all the spending is reduced when these high interest rates, high Fed funds rate happens, right? And so for a lot of investors, and I mean some of the larger investors, higher interest rates may mean let's pull my money out of the stock market, which ain't doing well in a typical time, not nowadays, but typically, let's pull my money out of there right now and go put it in some bonds or something, right? You see a lot of larger investors doing that typically when rates are higher and stock market's struggling. The only reason stock market's not struggling today, in my opinion, one of my opinions is, or one reason is, we got these tech giants that are carrying us. And I'm not mad at that. That's a good thing, right? Right? But when the Fed does not lower the rates, it tells me the Fed is not confident. And that kind of gives me an idea that maybe what we're seeing in the stock market, we may have some overvaluation going on in the stock market. because we don't see, most people don't realize or see that it's these few companies that are carrying the market. Most regular retail investors like me and you, we're just watching the S&P go up and say, whoa, things are looking great, not realizing the weight of these tech companies, right? Not realizing that NVIDIA is responsible for 30% of the gains we've seen year to date in the S&P 500, right? Let's see. Let's go back to the chat. BF, what are you talking about? Let's see. Everybody is mad at Jerome Powell. Yeah, I would hate to be him right now. Everybody mad at me, including kids. Let's see. When there is rate hike, is that conducive to business growth? So rate hikes, no, not conducive to business growth, Alvira. Typically, think about it. I own a hat company. I make hats. Interest rates are high. I'm not going to be buying no equipment, no new equipment. I'm not going to be expanding my hat company and growing my hat company because everybody doesn't have as much disposable income. Nobody's spending money like they were. But if interest rates are low, everybody's, let's go out and spend money. Hey, that hat over there, that blue hat, I'll take one of those. I'll take one of those. And so, no, when rates are higher, that means a little bit less spending typically overall, right? We know there's some outliers, right? Somebody said the stock market is FOMO and euphoria. Some of it is that way. Absolutely. Hey, Mr. Bill, good to have you here. Once that dies, let's see. Somebody says once that everything dies down, it may be worse than the 1929 crash, stock market crash. Maybe. I don't know. I don't see it at this point, but who knows? Recession is here. Did you hear Starbucks earning report? Did not see Starbucks earning report, but Starbucks is one of those things that are sort of a discretionary spending, right? So Starbucks has one of those businesses that when the rates stay high for a long time and people aren't spending money, they probably aren't going to Starbucks as much because Starbucks is sort of I don't know what they call the technical term. It's sort of a luxury item, right? So that does happen to some businesses. Let's see. Now they're robbing. Let's see. Smash the thumbs up. Guys, hit that thumbs up button. Get them up. Get them up. Hit the thumbs up button for me, guys. This is just basic, regular talk, but it's about our overall economy. The Fed's warning. Prices falling, but the stock market is up. We know the stock market is up, but look at the stock market being up with a grain of salt, with a little bit of caution, right? We're going to jump into and talk a little bit more about what's going on with some of these stocks as well. Let's see here. Boom, boom, boom. Some people are saying big crash is coming. Perhaps they've been saying that for a while, but listen, there's always going to be a crash coming. Always. Get used to it, investors. There's always going to be a stock market crash around the corner. It does that. It happens, right? That's why you invest for the long haul. You don't pull your money, add your money, pull your money, add your money. You dollar cost average, right? I think I'm going to do a video about dollar cost averaging, the importance of it, right? Being in the market on the way down, being in the market on the way up. So important. There's been some studies about that. And I may do a video about that sometime very, very soon. But dollar cost average is important. Let's see. Somebody said, where's this crash? I don't know. Could be there, but it's coming. There's always a crash coming. Don't let that get you into fear or FOMO or whatever you may call it, right? Do I think NVIDIA is going over 200 per share? Let's pull up NVIDIA today. Can I share my screen with you guys? Tell me I can. Let's pull up NVIDIA. Let's see what we got here. Let's see how NVIDIA is doing or did today. I'm sharing my screen right now. If you're not on YouTube, you may not see it. Not sure if you can or can't. But NVIDIA closed. Let's see where they closed today. Let's do a refresh of that real quick. Make sure we're good. Closed at 129 today. Let's look at them over for the past 5 days once they went public. They started off going public, I think, June 10th. They were at 120, I think, June 10th. And today, NVIDIA closed up to 129. Up $9 in 5 days. Still going strong, even though they had a couple little hiccups here and there, not a big deal. Still going pretty strong. Do I think Nvidia will hit 200? Yes, I do. I do think they'll hit 200 per share, right? Just my opinion. After doing some research, that's just what I think about Nvidia, right? So, yes, the changes in the Fed funds rate can affect the stock market in various ways. Borrowing costs, right? Our spending, our consumer spending, how investors are behaving, the economic outlook, all that stuff, right? All that stuff can, and I do want to talk about some of these stocks. How did the stock market close? Yesterday it closed up. I think today it closed, and we had another high. Was it an all-time high in the stock market again today? Let's check it out real quick. Let's see if we can't find something. Found something. Let me share my screen with you guys again. Remember, I like sharing my screen. So let me share my screen. Let's look at how the stock market did today. Let's see here. I'm going to pull it up. I'm going slow. Bear with me, guys. I'm also going to take a look at Broadcom, by the way. So stick around because I want to have a look at that stock. Yeah, that stock has had some good things going on. Here we are right here. Let's see. Okay. Let's see where we're at. Just shared my screen here. I think I found an article from CNBC today. S&P 500 posted its fourth straight record close, buoyed by cooler inflation. Let's see here. S&P 500 rose on Thursday to post a fourth consecutive record close. The broad S&P 500. Remember, S&P 500 is a nice indication of the overall market. The broad market climbed 0.23%, while the NASDAQ advanced. The Dow Jones was the underperformer, but the S&P 500 and NASDAQ hit record levels this week, boosted by fresh data. So we got the May Producer Price Index. Broadcom, which we'll talk about in a second. Broadcom shares surged more than 12% after the chip maker Broadcom topped fiscal second quarter expectations. Their earnings report, right? And they also announced a 10-for-1 split. Guys, Broadcom, just like NVIDIA, are doing a 10-to-1 split. Then it says, on the other hand, Dave & Buster's Entertainment dropped nearly 11%, and it goes on to talk about a few more. And talks about Apple as well. So, yeah, stock market is up. Since we mentioned Broadcom, let's pull up Broadcom, guys. I want to have a quick look at them just to kind of give you an idea of what's going on with Broadcom. All right? So what I want to do with Broadcom, let's do this. Let's just go all the way out. You guys okay with this? You tell me if you're okay. Let's go all the way out with Broadcom. Right? Let's go to their website. I went ahead and pulled it up here just a second ago when I mentioned it. Here's Broadcom's website. Let's see. There it is. There's their quarterly report. Their 10Q came out today. You say, what is a 10Q? It's the quarterly earnings report for a stock. If you are going to do your research on a stock, a publicly traded stock, I suggest that you go to that publicly traded company's website, dig around, and find their earnings reports. Here's Broadcom. You say, what is Broadcom? Who is Broadcom? Right? We'll open up their 10Q in a different let's look at their products. Here's what Broadcom is. They're doing a 10-for-1 split, just like NVIDIA. And by the way, Broadcom is like the 6th, 7th, 8th largest company on the New York Stock Exchange, right? In the S&P 500. They're huge company as well. Some of you may not even heard of Broadcom. Broadcom's diverse products portfolio. I think I'm sharing this with you guys. Yeah, I'm sharing it. Let's see here. Leading semiconductor and infrastructure software solutions. Its semiconductor portfolio includes data center switches and routers, which are used in data centers for AI, set-top CMTSs, cable modems, etc., Ethernet, NICs, filters and amplifiers, etc. So this is a tech company too. One of the tech companies that's carrying the S&P 500. Broadcom is a part of them, just like NVIDIA, similar to NVIDIA, right? But here's what this is what they sell: wireless, wire connectivity, optical products, mainframe software, enterprise software, cybersecurity is an area that they specialize in, etc. Solutions. I don't know if you guys can see that or not. Support and services. Boom, boom, boom. Company. This is where you can find their let's see, their investor center is right here. That's where you can find all of their financials on their website. You don't have to go to the SEC's website. You can go right to the company, and usually on the website, sometimes it's buried in there, sometimes it's not too far buried, is their financials, right? So let me just do this for you guys while we're here. If you don't mind, we'll do this. Let me just pull up their 10Q, right? Let me pull up their 10Q real quick and see what we got. If that's okay with you guys, I don't know if it is or not, but let's pull it up. This is how you research a company. I didn't mean to go into this, but since we're here, let's stay here, right? Sometimes you just go with the flow and just do what comes to mind. Here's their 10Q. I just put up their 10Q right from their website. This is their quarterly earnings. And just like 50% of all publicly traded companies, they are incorporated in Delaware, right? Delaware, which is the home state, I think, of the president right now. Is that right, guys? Help me out. I don't know for sure. 10Q, Broadcom. We look at them. We go down. There's their table of contents. I'm just showing you. Here's how I would do my research over Broadcom. Look at the top line assets, right? Total current assets as opposed to, this is actually opposed to last October, right? Total assets have increased by 5 billion. I think that's billion, right? Total assets are up, right? Of course, remember, they play in the semiconductor AI space as well, right? Excuse me. So total assets from 72, is that 72 billion to 175 billion? I think that might be. 100 million is right there. Yeah, billion. I think that's billion. So their assets are up, but let's look at their liabilities. Total liabilities are also up. So assets are up a little over about 2.5 times, and their liabilities are up about 2 times. That looks like a company that has a nice profit margin, a nice margin, right? Because their assets are up a lot more than their liabilities, but we got to go down and look at some other things as well. So I don't want to dig too deep into it, just to kind of show you this is what you would be doing if you were actually looking at Broadcom and saying, I'm going to maybe dig into their 10-to-1 split, buy some Broadcom right now. You got to look at all the numbers, cash flows and all that good stuff, right? And compare them. Do the comparisons between last and this one. And then also read the footnotes. I'm a big reader of the footnotes, right? Their overview and all these notes that come with it so you can understand what they're doing, et cetera. And if you notice, this is what, 68 pages, right? This is how you make a decision. Should I invest in Broadcom? Should I not invest in Broadcom? Start looking at the numbers, looking at the company, et cetera, right? So when I look at, let me pull up what Broadcom is actually trading at right now. I don't think I pulled that up yet, but let me pull that up real quick. What is Broadcom actually trading at? Let me type that in the deal and see if we can find it. There it is right there. Okay, so Broadcom is trading at, and I'm bringing up Broadcom, guys, because they are doing a 10-for-1 split. They're trading at 1678. How have they done the last, say, year to date? Right? January 1, they were trading at 1,085 per share. Today, after making the announcement of the 10-to-1 split and actually their earnings coming out, they're trading at $1,678. Huge. This is one of the companies that's carrying the S&P 500 to these record highs that we see happening in the stock market. Over the 5-year, here they are 5 years ago, let's say 4 years ago, 2020, 4.5 years ago, they were only trading at $315. Today, trading at $1,678. So while a lot of people are over here looking at NVIDIA, huge growth, looking at Apple, huge growth, right? Here's Broadcom over here destroying the game, right? Then you can go and do all your research over Broadcom. I'm just trying to, I got off on a tangent, right? But hey, sometimes you get off on a tangent, and this type of thing is important because we are regular investors and we want to know how to actually do regular investing for regular retail people. And that's how you do it, right? But I'm also trying to show you here that these tech companies, right? Even Apple had a huge week this week. Huge week for Apple. Let me pull up Apple, right? I'm still presenting. Let's pull up Apple, right? Hope you guys don't mind me sharing my screen so much, but I really like to look at these things because I like to look at them in real time so we can actually give you real stuff. So Apple trading at 214. They ain't splitting no time soon. I think they just had a split not long ago. But Apple, over the last, let's say, year to date, Apple, they had a big boost. Why did they have a big boost? They made some announcements a few days ago. Stock prices went way up, right? So beginning of the year, Apple was trading at 185. Now Apple's trading at 214, right? Over the past 5 years, there's Apple. You could have got an Apple back in June of 2019, 5 years ago. You could have picked up some Apple for $48. Now Apple's trading at $214, killing the game. That's killing the game, guys. It's a tech stock. Tech stocks have been carrying the S&P 500, carrying the stock market. If we were to do this with small and mid cap, especially small cap, we wouldn't be seeing these gains. These are huge companies. We wouldn't be seeing these type of gains with most small caps, right? Just something to think about, right? So so not to mention, by the way, I don't know if I mentioned it, but Chipotle is doing a 50 to 1 split also. Chipotle is trading like at $3,200. They're going to do a 50 to 1 split. So be looking out for that as well. All of this is happening, but how should you be handling all this as a regular investor? Let's have that conversation, guys. Don't forget, hit the like button for me, the thumbs up button. Tap that thumbs up button for me. I really would appreciate it. Check out my partner, Mint Mobile. Don't forget to check out how you can join us behind the scenes for more stuff. There's a link in the description box here on YouTube for that. Check that out as well, right? For us guys, we got to make sure that we're dollar cost averaging, as I said earlier, right? I'm a big fan of dollar cost averaging. Just stay in the market. I'm a buy and hold investor, okay? I'm not a day trader. I'm not hey, that looks like it's going bad. Typically what I buy, I hold for long term. So I buy these large cap companies if I'm buying single stocks, which I don't do a whole lot of. Most of what I do is ETFs and index funds, right? But you got to be investing in the good times, investing in the bad times. You can't be running when everything is going down unless you're about to lose a whole bunch of money, right? Now, that's another whole scenario, right? But when interest rates are higher, like we've seen, you got to think about some strategies as an investor in the stock market, right? I like to focus on quality stocks, quality companies, right? Now, not startups and things like that. I'm not really big on that, right? But I like to invest in things that tend to here's another piece of my strategy. I'll share this with you. I like to invest in things that typically are going to perform well no matter what's going on in the economy, right? No matter if whatever the economy, the conditions are in the economy or the Fed, whatever's going on, this is a company that has been tried and true and is pretty stable, and it's sort of a staple, right? What they call a staple. We need to have that product, right? Things like healthcare. I like healthcare things. I like things like energy, utilities. Some of these things that are going to be there no matter what. People need those things, right? That's part of what I'm doing when I'm looking at either ETFs. I like broad-based ETFs, but I also like some sector-specific ETFs too, right? Or companies. That's why I like AI. I like NVIDIA, right? Because these type of technologies are here to stay. They're going to be around, right? Because we see, in terms of AI, we see utilitarian uses for AI. And I think that is what is going to keep AI around. 20 years ago, we didn't see that, right? AI's been around for decades, but we didn't see it so much 20 years ago. Now that we have a platform of technology to build AI on top of, now we see it, right? I like those type of companies. Good, as I just showed you in that little Broadcom look at their 10Q, good balance sheets, right? Looking at their liabilities, the growth of assets to liabilities in terms of a ratio, right? That's what I look at. Low debt. I like companies that have low debt. Not really. It, I like companies like that. I'm just giving you some ideas what we need to be thinking about as we're investing during these times of high interest rates from the Fed, right? Some people like dividend paying stocks. I like dividend ETFs, VYM over at Vanguard. I like that, right? I always put the dividends back in. I don't want to touch dividends. Just put them back in. No big deal. I don't want to build a stream of income with dividends. Some people do, and that's cool if you like that, right? But this is what you should be looking at. Keep in mind with dividend stocks. Let me say this, guys. Since we're talking about dividend stocks, I look for companies or dividend ETFs. A history of good dividend payout, but it doesn't have to be the best dividend payout, right? I don't need super duper high yields when I'm looking at dividends. Oftentimes, guys, those are companies that are trying to boost their yields to draw investors in, and sometimes they're giving out dividends at the expense of growing the company. Sometimes, right? You got to be careful about that. 6, 7, 8, 10% dividend yield. Yeah, looks great. Great. I'm going to get a bunch of money, but what's going on with the companies in that ETF, or what's going on with that particular company? Why are they giving out such high dividends to its investors? Right. So lots of things to think about, guys. I'm giving you a bunch of things that we need to be thinking about as regular, everyday, average investors, retail, on the retail side, right? Somebody said you must check the 1-year chart. Okay. Let's see here. The more money the government prints and spends, the less the Fed can cut rates. If they did, it would be a double whammy of inflation spikes. That's true, Zach. Good point. I have Broadcom in QQQM ETF. All right. Good deal, Namisha. Appreciate you saying that. What are your thoughts on Bitcoin ETFs? Ryan, let me answer that. I'm about 14 minutes beyond when you asked that question, but I'm going to answer that question. I'm not a big fan of Bitcoin. There's nothing wrong with having a little bit of diversification, 3%, 5% of your portfolio in Bitcoin. If you really understand Bitcoin, 10%, 15%. But the point is, I don't own a lot of Bitcoin. I'm not a big fan right now of Bitcoin ETFs or of Ethereum, upcoming Ethereum. Is there an extra E in that? Not sure. Not a big fan of them. Not to say I own a little bit of Ethereum, right? Ethereum. I said it right. I own a little bit of that, right? But I'm not a big fan of Bitcoin ETFs. It's just, I got to see it tied to something that we use. I'm old school. Call me old fashioned. Okay. Don't beat me up if you're a Bitcoin, a crypto billionaire sitting on this chat. Don't beat me up. It's just that it's not something I really, really know a whole lot about. Know a little bit about it for the last 10 years or so. Let's see here. As long as the wars are on, they need our money. The Fed won't cut rates. Interesting observation, Zach. Let's see here. Somebody said, nice. Bro, do we get the stock split announcements? Namisha, I just gave it to you, but you're behind. That was 13 minutes ago. I gave it to you 10 minutes ago, so all is good, right? How much is Broadcom? I just pulled it up. Broadcom is trading at 1,600, but they are going to split. I'm not sure when that split is coming. I should have looked that up. Let's see here. I wish I got my money in this morning. I just woke up and put it in and seen the jump. Yeah, the jump. Whenever they announce a split, there's always a jump, right? A jump. Let's see. How was it? Well, too bad. I didn't pick up Apple 5 years ago because it ain't. I ain't a fortune teller. Absolutely. It's tough to pick and choose. That's why I primarily do ETFs and index funds, because I'm not a picker and chooser, right? I just don't have the time. Let's see. Somebody says Starbucks. Let's see. Would you ever invest in ETF or index funds? Let's see. Of course. Yes. JEPQ. is insane. 9% monthly yield. Yep, pretty high. JEPQ is one of those dividend ETFs. Let's see here. Let's see here. How is a taco company worth 3K? The Walla Mala Chipotle has grown tremendously, right? They've grown. I eat a lot of Chipotle. Let's be honest. I eat a lot of it, right? But the thing about Chipotle is I'm starting to get mad at Chipotle because they're always out of stuff when I go there, right? There's no this, there's no that, you know. But anyway, point being this, yeah, Chipotle is their stock is they're going to split that stock down. It's going to be like $80 or something by the time they do a 50-1 split. So we'll see what happens. Let's see here. I like the ETFs more than the individual stocks. Me too, personally, right? Next video coming out is going to be about that, right? Why I like like ETFs better than individual stocks. Let's see here. Every one of you all should get the Common Sense Investing by John Bogle. Yeah, that book is right here. Common Sense Investing by John Bogle. You can barely see it. Excellent book. Really enjoy that book. I'm a big Bogle fan. Not a Bogle head, but I'm a Bogle fan, right? I like index funds. Let's see. Kathy Wood has become an inverse indicator. I recently bought some of the stocks she's dumped. Kathy Wood is one of those people that is running a fund. What is the name of her fund? Can't think of it right now. So the point is, guys, as average everyday investors, how about making sure you're diversified, right? REITs, not just REITs, not just diversified in the stock market, but how about some real estate? How about some rental properties, right? We're looking at the stock market and saying, man, let me point this out to you. In 2022, the stock market was down what? 18%, 19%. S&P 2022, it was down. Let's pull it up and see, right? S&P 500 return for 2022 was negative 18%. 2022, negative 18%. But man, I had some rental properties in 2022. So because I had rental, and I still have those rental properties, they were up 15%, 10%, right? They were up. So there's nothing wrong with diversifying into other things other than the stock market. We talk a lot about stocks, but there's other places to invest your money that can help hedge against some inflation. Some of you like precious metals, right? Some of you like commodities, right? The corn and stuff like that, right? I'm not a big precious metal guy because I think precious metals, silver and gold, are more like insurance as opposed to investments. That's just me personally, right? But there's other places to hedge other than the stock market. Just something to think about. I don't know if I got real loud when I said that, right? But some people like cash and cash equivalents too, right? High yield savings accounts and places like that. So those are things to keep your eyes on and keep your radar out for just in case what happens with the market. Somebody earlier mentioned a crash, right? And if the stock market crashes, some people pull and go to other safer investments during that time. Who knows, right? Let's see here. Somebody said, I want to buy 1,000 shares of NVIDIA and sell covered calls. Zach, nothing wrong with that. You can make some money. Look, NVIDIA 4 days ago was trading at 120. Today is trading at 128, 129. And I think it's going to go up from there. That's me personally. I don't see it going down to 110. Okay? I'm just telling you. Right? I'm just telling you. Yeah, I'm a big VYM guy, MJ. I like VYM. Solid dividend ETF, right? So diversification. How about sector diversification? A lot of people like these broad ETFs, right? These broad, name them, VOO, right? SCHD, these broad ETFs. What about some sector-specific ETFs, right? Think about that as well. Because every ETF is not doing what the S&P 500 is doing, which is carried by the tech stocks, right? Keep that in mind. Another thing that we can be doing is this, unloading some debt, right? Unloading some debt, right? Avoiding new debt. Things we can do as regular retail investors based on the fact that interest rates are going to be high for a longer period of time than we thought. The Fed is not cutting the interest rates anytime soon. That means the rates are going to stay high. But here you have these high interest rate credit cards, high interest rate car loans, right? Get rid of some of that debt if you can, right? Something to think about. VGT, Gabriel mentioned. VGT is not bad. VGT is a what is VGT? It's an index fund from Vanguard. I think is it tech? I think it's tech, right? It's IT. Yep, I just pulled it up. VGT is IT, Vanguard IT. I think I actually own some VGT. I guess I should know what it is, right? Let's see here. I have 2 of each sector doing great. Congratulations to you. Zach said, if you buy gold, how do you know the gold is really there? You can always have your gold appraised and stuff, right? Let's see here. My rental properties have soared in the value. Yes, BF, my rental properties have gone way up in value in the last 5-6 years. Way up in value. And my rents have gone. Guys, if you don't know this, nobody talks about this, but I'm going to share something with you. If you own rental property, you have a hedge against high inflation. If you own rental property. Why? Because when the price of bread goes up and the price of milk goes up, the price of your rents that you charge goes up as well. So I have a couple of pieces of rental property. One rental property, 10 years ago, I was charging about $650 a month. Today, I charge $1,200 a month. Why? Because as inflation has gone up, and the charged rent has gone up. It's a hedge against inflation when you own rental property. You need to consider, if you're a serious investor, you need to consider some rental property. But you got to buy that rental property correctly. Don't just go out and buy any rental property and say, oh, I'm getting $300 a month as a profit. Great. I'm doing great. No, that's not going to cut it. Better ways. If you want to join me over on my other membership site, we're going to be having many more conversations about real estate. That's where I'm going to dig deeper into my real estate, my portfolio, what I own, why I own, and what you need to do if you want to own real estate. The link to that is in the description box of this video here on YouTube. Click the link to become a member, right? You can join for free, or you can become a supporter that actually has some paid tiers. One of those tiers is you can talk to me one time every single month for a 20 to 30-minute conversation to go over your own personal financial situation. I used to offer that here on YouTube, but I moved to a new site. So check that link out in the description box here on YouTube. And you can just have a conversation. Everybody's situation is different. Maybe you're considering some real estate. I'm going to give you a whole bunch of things to think about. I got 100 videos on this channel talking about real estate, right? In a playlist called Real Estate, right? And managing my own real estate, how to manage it, how to get tenants, et cetera, et cetera. But I don't want you to sleep on real estate. I know I'm kind of, that it may sound like I'm off topic, but this is really on topic. Because when the Fed keeps rates high, you need to make sure you have a diversified portfolio. And one of the best ways to diversify your portfolio is to have a little bit of real estate, right? So we'll talk about all that over there a lot more, right? We will do some exclusive videos over there as well. So please feel free to join me over there as well. Don't forget, also in the description box, we got 24 Laws of Money, free ebook, free from me to you. Do me a favor and hit the thumbs up button, guys. Don't forget, smash the like button on this video. Get you some real estate. Pay down some of your debt, right? Avoid any new debt if you can, unless it's on something going up in value. This is what you can be doing as a retail investor, right? And then, of course, you got to reassess what is your risk tolerance level. Don't panic. Don't get into this fear of missing out, which a lot of people have that when it comes to NVIDIA. And now probably when it comes to Broadcom, right? I showed you Broadcom is killing the game in the last 5 years. Apple killing the game in the last 5 years. NVIDIA, we know they're killing the game in the last 5 years, right? But don't get in this habit of saying, oh my gosh, I'm missing out, fear of missing out, right? Do your research, read the 10Qs, 10Ks, But these are some other strategies that you can do. I don't want to leave any live broadcast without giving you some things that you should and can be doing as a regular retail investor, right? So we talk about issues and problems and et cetera, but we talk about how you should be approaching and handling those things, right? These are strategies and things that you should think about doing and considering, right? As you navigate through this environment of higher interest rates, trying to preserve capital, grow capital, generate income, right? Diversify your portfolio and get some of this long-term growth, right? And I always say this too, when you're investing, guys, make sure that you have a plan of action, you're consistent, you're not darting in and out of the market. You could if you want, and you understand the game, but if you don't, stick around, be consistent, invest in what you know, risk what you can afford to lose, reinvest those dividends if you can, and don't panic. Don't panic. Somebody says, consider wearing sunglasses. The bright light is annoying. I don't know who they're talking about. Oh, okay. Let's see here. No debt over here. Good for you, Sunset on the Ocean. Let's see. VGT is too slow. Good lessons on this channel. Thanks so much, Florida's #1 broker. Hunter, Mrs. Moore's right. Get those likes up, guys. Appreciate you. Do I have VTSAX? VTSAX is, I think it's Vanguard's overall broad total stock market index fund, right? No, I don't have Vanguard's total stock market index fund in my portfolio, but I do have VFIAX, the S&P 500 index fund in my portfolio, right? Somebody said, get ready for the July 15th July 15th is the Broadcom split. Yeah, I think Broadcom's going to have a little surge over the next few weeks until that happens, right? Let's see. How do I deal with squatters? The Walla Mala asked me a question, guys. How do I deal with squatters in my rental properties? Oh, man, that's a great question. Kind of off topic, but let me tell you this, the Walla Mala. Squatters. First of all, know your rules, know your laws in whatever city, state you live in, right? Know what you can and cannot do as a landlord with those squatters, right? Don't let the squatters know more about their rights than you. That's a mistake that a lot of landlords make. The tenants know the laws and the rules better than the landlord, right? Better than the management company, whatever you have managing your property. Know your laws, know your rights as a landlord property owner. The second thing is several things you can do. Talk to them nice, have a conversation, send notices, go over there, get them out of you could call once you have your you know what you can do. Maybe you can call up whoever, authorities, what it may be, or you can pay them to get out of there, right? You can pay a squatter, depending on what they know. You can pay them a couple $100 to get out of there. Give you $200, get out of there. As soon as they leave, board it up, whatever, etc. Until you get the property together. $200, whatever. I don't think I paid my squatter. When I first bought my first rental property, I had a squatter in there. Big dude, too. 6'2", 6'3", huge, young. He about 35, 40 years old. But I had to kind of negotiate. I don't think I paid him. Maybe I didn't pay him. But the point is, you can do a lot of things to get a squatter up out of there. Just know your rules and follow the rules and do what you got to do. Okay, great question. I have a little invested in Fundrise. I would like to learn about how to own a rental property. Namisha, go check me out on the other website. We're going to be doing a lot of stuff about real estate over there as well. Have that conversation. I don't want to do too much real estate on this particular channel here on YouTube. The only reason I own rental properties is to hedge inflation. I love the tax write-offs and depreciation. Absolutely, BF. You know it. You know it. I don't see the link. Okay, let me go check that out real quick. Somebody said, I think the link is there, but I'm going to double check. Yeah, the link says join our community. When you go on this under this video right here, description, it'll say join our community. That is our community over on the other site where we're going to actually be doing a lot more in-depth behind the scenes stuff. Join our community. All right. So also over there is where you can get the one-on-ones. And also, hey, I'm pretty active over there. I just started being a lot more active over there this week since I went ahead and opened it up. But we're going to cut off this, join this channel on YouTube in just a few days. It may be in a day or two. So just so you know. So if you are a member of this channel, we're cutting it off, and you got to go join me over there. Somebody says buying puts. I'm not mad at you. Also bring 2 of my friends with me to visit my squatter, Smith & Wesson. Interesting. Hey, I understand that. I'm a Second Amendment guy, by the way. So, you know, I'm big on that. Nothing wrong with that. But you got to do everything within the law and within the rules and regulations when it comes to your tenants and so forth, or your squatters, etc. So, guys, I wanted to bring this information to you today to say, hey, look, this is the Fed's warning to all of us, and it's urgent as investors. The warning is interest rates are not going down anytime soon. If you're a retail investor or you have a business, understand that loans and money is going to be expensive for the foreseeable future. When we have what I think is going to be the one rate cut this year, when that one rate cut happens, that rate cut will not be 100 basis points, which is 1%. I don't think it's going to be that drastic of a cut. Okay. So just to say, these higher interest rates, we need to get used to them. I think they'll be sticking around for a good while. And I think that's what the Fed's message to all of us was, that even though prices are falling, they still are not falling to the level that the Fed wants them to be at. Yes, the stock market's up, but remember, the stock market up is caused primarily by this surge in these tech companies. Apple, way up this week. Broadcom, way up this week. NVIDIA, split plus being up this week, right? This is what's carrying the stock. I think I read where Apple took over from Microsoft as the #1 largest company based on market cap this in the stock in the stock exchange, right? So Apple jumped to #1, Microsoft is #2, NVIDIA is a close 3. I had a video last week where I told you guys that I think that Microsoft will topple in 6 months. Microsoft toppled to Apple in 5 days. Huge, right? So I think the rate cut that we see coming up is not going to be a big old 100 basis point, 200 basis points. No, it's going to go down extremely slow and gradually. And I think we might get a 50 basis points, half a percentage point, right? Maybe 3/4. But that's it, right? Yes, this is a landline phone behind me. Yeah, going to jail over a squatter in your rental property is not worth it. Let's see here. Apple only surprised them for 1 second. Hey, I'm going to let you guys get out of here. Please do me a favor. Smash the like button. Thank you so much for hanging out with me. I really, really appreciate you guys. More than you know, channel is growing and growing and growing thanks to you. Don't forget to take advantage of the stuff that's in the description box below. Mint Mobile, if you want to get less expensive premium wireless services, check them out as well. Don't forget to check out our membership site. That'll be in the description boxes below as well. I appreciate you guys more than you know. I don't want to hold you any more than this. Just to say this, I always end every video with this. The best person who's going to take care of the old you is the young you. Guys, do me a favor. Take care of yourself. Take care of other people. Until the next video, peace.